Alright, so here we are. This is my entry criteria for entering the market. Um, I highly recommend, please do not just copy and paste this, put this into your own strategy. Each one of these things here has been back tested, has been studied, and more importantly, that to a point where I understand it. And that's the most important thing with an entry criteria and strategy, yeah, is that you understand it, you've seen it in action, and you're confident with it. You execute time and time again and allow probabilities to play out. And the reason that I have a checklist like this is that it really helps me eliminate the emotion. If I can tick off all these boxes and the market is a bit like, yeah, but I don't know, should you not? If all the boxes are ticked, I'm sending it. But it goes on the flip side as well. If the market looks lovely and I'm really tempted to get in, but one of these boxes ain't ticked, then I stay out. And if it goes without me, I've got no qualms with that. It's not part of my entry criteria, and I can sleep well at night. So yeah, the market is not always picture perfect, but I have put together a little diagram to kind of help introduce and explain what each one of these items on this list is representing. And yeah, wait out for future content to actually explain this in a bit more depth. So in previous trade recaps, I've already made one of these, and you're not going to see much difference apart from the fact that I am more focused on liquidity, not so much about trends. I don't really care what trend we're in, like the pro trend, counter trend, daily trend, weekly counter trend. Like, I just found it was kind of getting a bit messy. But what I am interested in is when we see liquidity sweeps all sinking. And when I see that, that is when I'm starting to pay a bit more attention and look for entries. So yeah, similar stuff to what we've done on previous recaps. I'm just going to flick through a little diagram now, and we're going to break each one of these things down quickly. Okie doke. So let's have a look at our higher time frame narrative type A liquidity. Alright, which is, have we swept type A liquidity? Right? And what we want to see is, still we're going to be playing from a point of interest, right? And the point of interest wants to fit our criteria, which is sweeping liquidity and flipping a level of demand. Right, so this white box here used to be a level of demand. That price action's come down, tested, failed, and then got broken. Doesn't matter how many times this gets tested. Right, it could be once, it could be 20. But what is important, that I want to see like a fight between demand and supply, and for supply to win. Right, if this just blows straight through some level of demand, demand hasn't had a say in the market. Right, I want it to be involved, and then I want to see it lose. All right, I want to see supply break demand serve. Okay, and it's swept liquidity, broken demand serve. Right, now type A liquidity is like structured liquidity. Right, so I don't trade structure. I don't really trade trends or anything. As I said, trade liquidity. But where is liquidity? Liquidity is around structure. Yeah. So what's happened there is, like, the trends come down, create a lower low, come up, create a lower high, broken this lower low to create a new lower low. Now there'll be a lot of orders here, right? Seeing that this is like a trend, breaking this low, and they'll have their stop losses and drawdown and all that good stuff above this high. Alright, so that's a lot of money, yeah? And algorithms love money. They just follow wherever the money's at. They don't care about trends and stuff. They just want to find the money. And so do we. And we're going to follow the algorithms. Right, so I wouldn't be surprised the algorithm will come back up, sweep this liquidity, sweep all these orders, mitigate this strong point of interest that's already swept orders, and it's proven to be strong because it's flipped the level of demand, right, and then continue the trend short. So that's what we want to see. So this is type A liquidity, okay, structural liquidity. it's very important that type A has broken a low. Okay, lows been formed, come back up, broken. Um, this could happen, I suppose. Oh, I've got two there. Hang on. Yeah. This could happen like on the flip and then break. Don't mind that. I actually quite like that. It's called like flip inducement. Happy days. Or it's gone through. Either one is fine as long as it's structural liquidity and we've had an interaction. All right. If this was like, I don't know, something like that, that's fine. Yeah, as long as there's been an interaction with demand, and excuse the dogs, and then it's got broken, then happy days. What I said here, like, so I want to see a refined 15-minute point of interest within here as well. Okay, so I define a high time frame as in 4 hour, daily, weekly. Not, well, I do play monthly, but rarely, obviously, because they don't come around so often. But when they do, we'll still play it. But yeah, 4 hour daily is way more common, and that's what I define as a higher time frame. Yeah, I want to see if I can refine this down to a 15-minute entry model as well. And if there is a 15-minute refined entry model here, when we come back into this area, if this meets all our criteria of like an Asian sweep and in our kill zone basically, then I'm happy to just go straight to the 1 minute entry here. Alright? But if there's no 15-minute refinement here, and this is just like a kind of bigger, kind of higher time frame point of interest, I want to wait for a 15-minute confirmation, and then our extra 1 minute confirmation. Okay, basically, I'm going to be entering from a refined 15-minute point of interest no matter what, whether it's going to be from here on type A or we get one here and we've got to be a bit more patient. So yeah, our time frame. So still, yeah, still got the same criteria with points of interest. We'll go through more depth of a strong point of interest in actual content videos to come. But yeah, I always say from a point of interest to create a flip. And do we have liquidity to target? That's a good one. So this is where demand's probably not had the strongest order flow, or maybe it's not been sweeping liquidity like here. So this has created a new higher high, broken this high, yeah, but it hasn't really swept any liquidity. It's kind of demand's looking a bit weak, and when it doesn't sweep liquidity, it becomes liquidity, right, to be swept. So it's created a higher high, yeah, sure, like substructure. It's even broken this kind of structural high now. So now all these orders and liquidity is getting taken, right? Then it's had enough, got enough fuel. Now it's looking for the next bit of fuel. And where's that? Below these lows. Alright. So yeah, there's the type A. Anything else to come on that? Don't think so. Let's have a little butchers at type B. Doo-doo. So yeah, type B. Okay, so point of interest in exactly the same detail. Yeah, we want to see it sweep liquidity. We want to see it flip a level of demand. Right, again, it doesn't matter how many times this level of demand has been tested, but we want to see an interaction. Right, then it's broken through. And what type B liquidity is, so it's either one of these two is usually ticked. Sometimes I'll tick both, like we could have type A liquidity on the weekly and then type B liquidity on like the 4 hour. So it's sound, but as long as one of these are ticked, that's my entry criteria satisfied. And type B is when we get this, right? So demand's come up, swept liquidity, and supply has broken demand serve and come down. On all this is one structural leg, and then it starts to pull back, right? But it's the same detail. Like this is still a structural high, yeah. So we don't want to become with the norm and have our stop losses above this high, right, and backing this trend short. Yeah, we understand that we need fuel for the market to move, right, and we don't want to become the fuel. But sometimes these are strong. Okay, this is the higher time frame, right, and sometimes this is a good price action. This is a good price for algorithms to sell at. They're happy. but to do so, they're going to need fuel. Right? They've got to create some liquidity to sweep to continue this trend short. And the way they do that is they'll place it like just below this point of interest. Right? And when we're here, yeah, we might actually get like a bit of substructural type A liquidity formed, where it will kind of come down, create a low, create a lower low. So now this is like a bit of a protected high, right? Then create a substructure lower low. So now orders could be above these highs, come up, sweep this liquidity, and then melt off. But with this, I don't care if I see a refined 15-minute point of interest from back here, right? Because this is a little bit more aggressive, but price does go from these points of interest. I want to see a refined 15-minute entry model, more recent. Okay, something happened here, right? Where before on type A, if I can find a refined 15-minute point of interest way back here, I'll enter straight off the 1 minute here if it fits our criteria. But with type B, I don't really care how refined this is. I want to see a confirmation that supply is going to hold serve here, and not only just hold serve, it's going to break demand serve, and that this is going to continue short. Right, so that's the difference between A and B, is that there's no structural liquidity to take, but it creates internal substructure liquidity to take, and we want a bit more confirmation on the 15-minute. So yeah, that'll be type B. Let's have little Berkshires over on the mid time frame now. Yeah. So mid time frame entry model is pretty much always the 15-minute time frame. I don't really refine too much lower than that, and I don't really bother looking at anything higher than that. Yeah, I might as well change this to 15-minute. And there is no type A, B, C, D, whatever with the 15-minute time frame. It is all just the same stuff I look for. And again, it's the same for buys and sells. We'll look at demand in a minute. So this will be like our higher time frame point of interest. Okay, and yeah, it's not a must, but it's very nice to see, especially if it's type B. If we get our liquidity, our sell side liquidity within the point of interest, it's kind of like a fake out where they might be tapping into this and then melting off, and then be like, no, actually, one more little tap. Excuse me, before we melt off. But yeah, without getting in it too much, what are we looking at? Have we swept the correct mid time frame liquidity syncing with a higher time frame liquidity sweep? Yeah, so as I said, we're just looking for sells at the moment. Purple is sells, that supply is serving. This is our high time frame point of interest that we've now swept our type A liquidity or type B liquidity, right? And there's two important factors on our 15-minute time frame, is that we come up, we sweep liquidity, so we take fuel, we mitigate our high time frame point of interest, right? Then we come down, and this is the important bit. There's a level of demand, right, that has swept liquidity and still failed. I want to see it sweep liquidity, because then that's giving this demand point of interest every opportunity, right, to continue the trend long, and it still fails. Right, so this is like, I want this supply to break a strong level of demand. What defines a strong level of demand is that if it's got liquidity to go. Okay, so this has had liquidity, it's had everything it needs, and it still fails. Right, there's been a supply to demand interaction, it hasn't just blown straight through. Right, it fails and then gets broken. Okay, so that is confirming now that supply is syncing with a higher time frame narrative as well for sells as well. Inducement is important. I kind of call this flip inducement because it's really juicy if it happens before the flip, right? And this is a must on the 1 minute. And that is basically, again, what I was saying with our type A, right? Let's say it's us. Let's say there's people here looking for shorts, traders here looking for shorts, because this is a structural high It's broken this low, which has flipped the level of demand by all the supply demand traders out there. So they have their entries at this point of interest with all their stops and their drawdown just above it. And the market loves money, so it's going to come up. It might give a little reaction and melt off a little bit, right? But hopefully it will come up and take all these orders, put all this money into drawdown, right? Mitigate the extremity and then melt off, right? It's important to know that for me personally, I don't mind if it goes from the inducement, because sometimes it will go from the inducement. This is still a strong point of interest. And if it does melt off from here, then I'm like, oh, fuck it, well played, do good, I missed that one. But something what I've learned in the past, and I personally struggle with, is if I enter here, yeah, and it does become inducement, and I take a 1% loss, this is still a good entry. This is an extremity. If anything, this becomes stronger. So then I want to enter again, right? Now, if up here, if I get like a bad fill or slippage or just fuck up somehow and don't get the right entry and get taken out, but then this is still holding, am I going to enter again? That's like 3% on one setup, right? And probabilities don't, we can't identify the distribution of wins and losses in the rule of probability. This could be a loss. It's a nice setup, but this could be one of the losses. I don't really want to risk 3%, 1, 2, possibly 3 on one setup, alright? So yeah, that's why I don't play inducement. Alright, and even to the point where, even if this is good and I just get a real good one here, I'm still risking 2% on one setup. I don't like that. I just prefer to keep risking a whole 1% and go from the extremity. You could, I've done it in the past, just risk 0.5% and you can play both. Something to think about if you wanted to. But yeah, I personally I'm happy to accept that price could sometimes go from the inducement, and it goes without me. I'll just wait for next time. But I'd rather just be a bit more patient and just play from the extremities. That's just me. So yeah, is that everything? So yeah, we're sweeping sell side liquidity, syncing up with our higher time frame liquidity sell side sweep. Point of interest that created a flip. Yeah, it's created this flip, and it's got order flow. Yeah, so it's mitigated our higher time frame narrative. Important thing with the flip: this demand has swept liquidity and still failed. All right. Cool. So then, last one. Thanks for your patience, guys. We'll go down to our entry. So now this. Geez, what am I doing? There you go. So this is now our 1 minute. Okay, so we've gone from a higher time frame, which is 4-hour daily, weekly-ish, monthly-ish, down to our 15-minute time frame, which is our middle time frame. And now this is our 1 minute entry model. Just ignore the Asian market for now, but that is apparent. But there's so much to that I think that's better off just waiting for an actual whole content video describing that in better detail. But I'll touch on it briefly in a second. But first of all, let's have a little look at the structure. It's pretty much exactly the same stuff. Yeah, like price action is fractal. So we're going to see ideally our liquidity within our 15-minute point of interest. Alright. Come up, come down, then we come up. Sweep this liquidity. Yeah, this could be like an Asian sweep or coming to an Asian premium, whatever. And the reason I've still got chalk, okay, is because sometimes I do like going down to the seconds, and you can see all this lovely price action, yeah, all in like 30 seconds, right? But there hasn't actually been a change of character, trend, whatever you want to call it, on the 1 minute yet. Yeah, it's kind of like it does all the flip and like the inducement and everything within here, but we haven't actually changed 1 minute trend yet. Alright, and it's just something what I've just got to really Oop, go away. There we go. I just had to keep in my plan, my entry criteria to remind myself that 1 minute shock. All this has got to be on the 1 minute entry model. Yeah. So anyway, yeah. So prices come up, swept this liquidity, mitigated now our 15-minute point of interest that had mitigated our higher time frame point of interest. Come down, and again, same detail. Even more important now on the 1 minute as well is that it taps into a level of demand. Yeah, and not only taps into a level of demand, it sweeps liquidity and taps into a level of demand. So now, if demand wanted to continue this trend long, it's got everything it needs, right? And it still fails, and then supply breaks demand. Right, so that's like a proving that it's broken a strong level of demand. Okay, supply is now serving on the 1 minute to sync with our 15-minute to sync with our higher time frame. Right, so now probabilities are firmly on our side that supply is serving and that we can look for sells and to continue this trend short. Same detail with inducement that I just went through on the 15-minute. Now, I just don't want to enter these inducements. Right, I don't want to like take a loss here and come up here. I hesitate. I don't like it. It's kind of 2% on one position. Not for me. I'd rather just wait for the extremity, and it is a kick in the teeth when it goes from the inducement. I'm not going to lie, but I'm happy to just accept that. I will note though that this inducement, if I can enter from the inducement and still have my stop loss covering this high, what's not too big, right? This is like no more than like 5 pips, then I will. Okay, but if this becomes like more than 5 pips, 694, then I won't bother. Okay, I'll just cover the extremity. But sometimes this is close enough that we can cover both, and I'm happy with that, especially if it's a real strong setup. But if it's not, then yeah, I'm just covering the extremity. And yeah, this has got to be before the flip as well. I don't really like it after the flip. I like it as the inducement, as in again, like this is the structural high. It's a bit like Type A. There's traders, banks, all that kind of stuff, seeing that this is a level of supply that's broken a level of demand. So they've got all their orders here, and their stop losses and drawdown above here. So the algorithm's going to hunt those orders, and it's going to come up, sweep it, mitigate this extremity, which is swept liquidity, swept fuel. There's no more reason for it to go any higher. Right, this is a strong level of supply, a good price to sell at, and then it'll melt off. I haven't really touched too much on target liquidity, right? But it's kind of always the same stuff, as in if a point of interest, so see this low here broke this high, right? But it hasn't swept liquidity. If a point of interest doesn't, it just mitigates order flow and doesn't sweep liquidity, it becomes liquidity, right? And there's liquidity everywhere, you know what I mean? But if we've swept sell side liquidity and we've got buy side liquidity to target, right, and it's fitting up with all our entry criteria, then happy days. Real important, I don't trade outside these hours. Forex times of 0300 to 0530. This usually sinks in quite nicely with an Asian sweep, which, as I said, we'll go into more detail on more specific video. Otherwise, I'll be here all day. This orange box here is Frankfurt, so like I'll touch on it quickly. I'll try not to waffle too much. This could be the Asian market, and then all this is like a real strong point of interest. Yeah, stacked on our daily. It's all looking juicy. We're waiting for our alerts to be triggered for this to be sells, and it might not happen in the Asian market, and Frankfurt might like just trickle down a little bit to London Open. Then the London Open will push long, right? Sweep all our Asian liquidity, come up into our point of interest, yeah, and then it's about like between 4 and 4:30, 4:45ish. Basically, what this is doing is getting traders thinking that the London is bullish. They have all their orders below this low here, right? And then at around like an hour, hour and a half into London, it will mitigate a strong setup and then just pull back. Okay, so yeah, I think that could be in more depth in other videos, but just in case you hear about it, me talking about that and these trade recaps, there's a little intro to it. That's another form of Asian sweep as well. But I'm pretty sure that covers it all. So are we entering in our kill zone? Timings between 03 and 0530. Bonus if it's around 430. Setup, sweet. Have we broken serve to match with a hard time frame and middle time frame narrative? Yeah. So we want supply to sync with our 15-minute and our high time frame. So all being, we don't care about the trend. We just care that it's swept sell side liquidity. Right, each one of these time frames have swept sell side liquidity to sell. All right, that's what we care about. That's what I care about. Do we have a minimum of 1 minute chalk? So I want a minimum of 1 minute. As I said, that's kind of probably more for me because I can get lost in the seconds sometimes when I get excited. That's a little reminder. Has there been a flip? Yeah, remember this is just on the 1 minute now. There's always been a flip. Have we swept liquidity? Do we have inducement? Very, very important on the 1 minute. I would not enter this if this is just blown straight through. Really need that last bit of fuel for before our entry. So yeah, happy days. So yeah, I'm not going to explain it all again, but I will quickly show the demand diagrams as well. Because yeah, we're not biased. If the setup is there for buys as well, we're happy to buy or sell. Doesn't matter. So again, exactly the same detail, but with demand. Yeah, and try not to go through it again. I get excited. You know, this used to be a level supply that is now flipped. It's swept liquidity, and type A is when it is dropped structural liquidity. So there's been a higher high, a higher low, then a new higher high created. Right, but our point of interest that has swept liquidity and caused a flip is up here. This one hasn't. So this is the liquidity. Oh, I've got double lines. So even though this trend starts going a bit bearish, it's going bearish just to create liquidity, right? Because this liquidity is not sweeping anything. It's just mitigating order flow. If it's not sweeping liquidity, what's it becoming? Becoming liquidity to be swept, coming into our point of interest. And again, I really like type A, so I'm happy this can be refined down to 15-minute. I always want to go from a 15-minute point of interest, but we can get the 15-minute point of interest from way back here, and this fits with our kill zone time and HR and all that kind of good stuff and the Asian sweep. We got our 1 minute entry model. I'm happy to go straight from the 1 minute here. If we don't have a refined 15-minute, or this isn't within our timings, it'd be nice if we get a 15-minute confirmation first, then we go. I don't mind. But type A, basically what I'm saying is I'll go straight to 1 minute from here. But type B, oh wait. Type B, there's a little bit more going on, and there could be orders below here, there could be money below here. So I do want to wait for a 15-minute confirmation in more recent price action. Yeah, but everything else is the same. It's a point of interest that swept liquidity, flipped to level supply. Yeah, I want to see like it's mitigate like a weak level of supply. So this is like a point of interest that doesn't fit our criteria. Maybe hasn't swept liquidity or hasn't caused a flip or any of that kind of stuff. And it's kind of like just part of create a pullback to mitigate our stronger point of interest. But yeah, I want to see a 15-minute time frame confirmation in more recent price action before looking for our buys on our type B liquidity. So type B is not structural liquidity, it's when liquidity is created before our entry. Alright, type A is structure, type B is created. So that's our demand. So again, it's exactly the same stuff, just we're looking for buys now. Remember this bit, very important. I am going to go through it all again properly, aren't I? Sorry, I get addicted. Come down. Our liquidity ideally is within our higher time frame point of interest. Sweep that liquidity, mitigate our higher time point of interest, and then comes and taps a level of supply, right? And not only does it tap the level of supply, but it sweeps liquidity, important. And so now supply has every opportunity to continue the trend short and still fails and then gets broken. So now we've swept our higher time frame buy side liquidity. Now we've swept our middle time frame buy side liquidity, and we've broken levels of supply. So now demand is serving on the higher time frame and middle time frame. And then we're going to wait for our 1 minute time frame to do exactly the same. And if it is, probabilities are on our side to buy. Same detail with inducement. As I said, it could rocket from here. And if you're going to play this way, accept the fact that it does go from here sometimes. Right, you can do it two ways. As I said, you can start risking just 0.5%, or fuck it, if you're happy to risk a whole 1% here, and then if it fails, a whole 1% here, and then if you get a bad feel or something, a whole another 1%, and you want to risk 3% per position, then go for it. But my personal comfort level of risk management is I just want to risk 1%, maximum 2%, allowing room for slight entry mistakes, which very, very rarely happens, but I've just experienced in the past it does happen, and I'm happy to maximum risk 2% in each setup. It's almost like in a point, like a service point. It's like I want first serves, but if I miss my first serve, I've got a second serve. Alright, I don't have a third serve in tennis. Alright, just like I don't have a third serve in trading. So yeah, there's the inducement. Just see it as extra bit of fuel. Sweet. Target liquidity. Happy days. And yeah, same detail for 1 minute. Same time frame, same Asian sweep. We'll just obviously be sweeping the buy side liquidity of the Asian market, tapping into our 15-minute time frame, middle time frame, getting our 1 minute shock, coming down. Ideally liquidity within our point of interest, but it's not a must. It's just like an extra little bonus if we see this. Sweep that liquidity, mitigate middle time frame, get our 1 minute shock. Again, very important that we test a level of supply, right? And not just that, we sweep our sell side liquidity, so now supply has all the fuel, all the reason, everything it needs to go short, and it still fails, drops inducement, breaks, gets broken. So now demand is now serving on the higher time frame, middle time frame, and the 1 minute. It's swept the fuel already to make this move, and then it's created the fuel, the inducement for our move to tap. And then there's the algorithms, got all the money in the world. Now it's looking for the next bit of money because it loves money. So do we. Where's the next bit of money? It's at this supply order flow that it's been mitigating order flow, but it's not been sweeping anything. If it's not sweeping liquidity, it's becoming liquidity, and there's our target. Cool. So I hope that really helps, and I hope that's what we're seeing on the charts, on these trade recaps. As I said, I'll go into a bit more depth on each one of these checklist, if you like, and but I think for now, for these trade recaps, that's a bit of an understanding on, I'm not just randomly buying and selling anywhere in the market. This is the checklist, what you'll see on each trade recap, and I want everything ticked here. All right, the only thing what might not be ticked is I only want either one of these. Sometimes I get both. This might be, I might have type A on the weekly and type B on the 4 hour or something like that. But if I've just got type A on the 4 hour, I'm sending it. If I've just got type B on the 4 hour, I'm sending it. But yeah, everything else will be ticked. And yeah, the reason I do this is, as I said, this, it helps me try to eliminate emotion from entering the market. Yeah, it doesn't completely, but sometimes the market can look great, and I'm like, oh yeah, I'm selling this all day long, but it might not have, it might not have one of these ticked, so I'll stay out, right? And even if it goes without me, I'll still sleep well at night. I mean, I don't mind. It didn't fit the plan. Okay. And then on the flip side, sometimes the market might look a little bit messy. It's not always the same every time. But if all these boxes are ticked, I'm like, fuck it. It's the entry plan. I enter, then it takes me out for a loss. I'm like, fuck. Nah. And it still goes, And you're like, okay, sweet. So, yeah, hopefully that explains things in a little bit more depth. Look forward to future videos. I really enjoy this one. I'll probably make that one of the first content videos I make. But for now, I'm just going to stick to the trade recaps. And I'll see you guys on the next recap. Cheers. Bye.